Opposed to regular cement-based concrete, e-concrete includes certain elements that enhance the growth of marine flora and fauna of plants and animals. Our admix, which is kind of our secret sauce, is basically kind of sealing the concrete, making it less aggressive for the marine environment. That once we add it, we enable life to flourish.
In the lab, the team run tests to identify what mixes will work best for marine life.
So we take really ice cube-sized concrete slabs of different compositions, and we put larvae, 20, 30, 50. We need to have a lot of replicates. We're geeky scientists, so we have to have a lot of replication and controls. And then within a few days or just a few weeks, we can get an answer on their preference. So obviously, if they die, they have a very low tolerance to that specific concrete mix design. And if they thrive or they flourish, we can quantify that very quickly.
E-concrete says it typically sees double the biodiversity of regular grey concrete. From fish and sea caterpillars on their armour blocks to crabs on these tidal pools that sit on the shoreline.
This unit holds water during the low tide, so it's always moist, and therefore it has a very comfortable habitat for crabs and sea anemones and sea stars, etc. These pools have been here for less than 3 months, and this is already what you can see. It's covered with life. See the rock around it, which has been here for probably 10, 20, maybe even more years, only has a thin layer of green algae, and that's it.
As well as the composition of the cement mix, e-concrete designs its products specifically to the marine environment it will be deployed, to create niches for endangered species, or to develop nurseries like these oyster beds. The final part of the equation is creating complex surface textures to mimic natural rock or coral, an environment that helps anchor young organisms.
When concrete elements are being cast, the typical goal is to have a very slick surface, very, very smooth. The idea is to get the water to flow right across it. When we're designing e-concrete with a rough surface, we want to do the complete opposite. We want to slow the water when they are crossing the structure so that the larvae can actually adhere and attach to the surface.
E-concrete has to offer its clients more than just ecological credentials. Over time, they've discovered that creating hospitable habitats for marine life adds another advantage, one that is surely hard to ignore.
We've seen evidence to the fact that the growth of the organisms on the concrete create kind of a layer of defense. Just the addition of weight, we can actually gain stability and strength over time.
This is let's say the unit when we put it in the water. And this is after a year in the water. And what you can see here is all the oysters are completely covering it. We designed the units so they can withstand the forces and perform in terms of structural performance, but they can also be a backbone for ecological enhancement.
The company tests its miniature designs in tanks full of real seawater, rocks, plants, and animal life from around the world.
What we're looking for is the accumulation of calcium carbonate on the surface of the concrete of different mixes and different designs. This is the process that we call biogenic buildup. So with time, we get a buildup of calcium carbonate that is sourced from marine organisms on the surface of the concrete. And we actually encapsulate the concrete with a natural rock. So when the organism dies, in case of a coral, it will die, and then another coral will sit on it, and that's how a reef is growing.
The hope that our man-made structures could become stronger over time also means better economics. The units require less maintenance and could therefore stay in the water for longer. E-concrete, though, is just a few years old, so it needs more time to really quantify the longevity of its products. But the company are certain their products are better for the environment, and not just in terms of improving biodiversity.
We're kind of trying to offset some of that immense carbon footprint of the concrete industry.
Construction is responsible for about 11% of global carbon emissions. By adding a biological crust to their products, e-concrete prevents some CO2 from being released into the atmosphere.
For every kilogram of calcium carbonate being created by those marine organisms, we're offsetting 120 grams of CO2. So think about building a port infrastructure or a city waterfront that is an active carbon sink. I think that's a great advantage of the technology.
That does it for this week, but let's keep the conversation going on Twitter. Follow us at Climate. I'm Anne-Marie Hordern, and this is Bloomberg Green.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser on Bloomberg Radio.
Good Monday afternoon from New York City and points beyond to our worldwide audience. You are listening to Bloomberg Business Week. I'm Paul Sweeney alongside Alex Steele, and we are sitting in for Carol Masser. Coming up on today's show, we'll get the latest on the pandemic and the vaccine rollout. Plus, we're going to take a look at what the just passed fiscal stimulus plan will mean for America and the economy. But first, let's get a Bloomberg Business Flash. We do that with Charlie Pellet.
Hi, thank you very much. Happy Monday to you both. The Dow, the S&P, Nasdaq all advancing. We're looking at records on this holiday shortened trading week. Equities rallied after President Trump backed away from earlier threats and signed a coronavirus aid package. Right now, the S&P 500 index trading close to session highs, up by about 34 points. That is a gain of 0.9%, and extending its year-to-date gain to 15.7%. The Dow's up 215, up 0.7%. Nasdaq, a record there, up 108, now higher by 0.9%. 10-year down 230 seconds, 10-year yield 0.93%. Gold is down $7 the ounce, down 0.4 at $18.76. And West Texas Intermediate crude down 0.9%, $47.77 a barrel. So again, recapping, stocks rally, S&P up 34, up 0.9%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Charlie Pellet, thank you so much. We appreciate it. Let's set the Bloomberg Business Week agenda. We can do that with Kriti Gupta, cross-asset reporter for Bloomberg News, and Vince Signorello, global macro strategist for Bloomberg News. He's on the phone from White Plains, New York. Kriti, let's start with you here. It's another holiday shortened week, although we are seeing a little bit of a lift to the tape here, perhaps on the back, as Charlie Pellet was just reporting, on the back of maybe some fiscal stimulus moves.
Absolutely. I think that's what's driving all the price action today. And you're not just seeing this in the sector stories, you're seeing this in the benchmarks too. I mean, the Russell 2000 is really what I had my eye on. It's this nonstop rally you've seen for small caps, and a big chunk of it simply comes from this idea that this bill was a must-pass bill. The way that it was structured, the stimulus bill was attached to the spending bill, so it had to get a vote, it had to pass, and that kind of inevitability, that factor, that's really what led to small caps outperforming. Today, on the other hand, though, you're actually seeing some of those gains fade a little bit. So an interesting dynamic. Stimulus definitely the key driver.
So, Vince, as you talk to some of the traders that out there on the street, for the ones who actually are coming in to the office this week, help important is this stimulus plan? There seems to be a lot of noise around it, and I guess we shouldn't be surprised at that. You know, the president now saying he wants more money and so on and so forth. And I'm not sure, I can't even tell the players without a scorecard, but what do you hear when you talk to traders?
I think what traders are really getting their arms around is, yes, we have a stimulus bill, but it's a little bit like Brexit and buy the rumor, sell the fact. I mean, I think by and large everybody expected this to pass. There was no way either side could really politically go forward and have a Grinch stealing Christmas kind of thing and have unemployment benefits run out and no one get money, et cetera. So I think this was a little bit built into risk, which is why we see, stocks just up to, I'd say just up 200 in the Dow. But, you would have expected, I think, a much, much bigger push if this was a big, grand stimulus bill. So we wait on the Senate now, and we wait to January to see if the Senate flips Democratic. If they do, you will see a massive rally to start the year. But at the moment, a $2,000 stimulus check isn't going to happen. And as I wrote in the blog post, back in my heyday as a trader, a $600 check didn't cover my bar bill.
That's right. Going back to the 90s and the 2000s. Critty, it's interesting here, just kind of looking at the bond market. Pretty quiet here. We got the 10-year trading at 93 basis points. What's the expectation here as we go into January and maybe people start discounting what a Biden first 100 days will look like?
Well, absolutely. So we're still on that 1% watch, and we have been for what seems like a very long time. And a big chunk of that simply is coming off this idea that a cyclical recovery that you're seeing, obviously the stock market, that will show up cross-asset. You'll see it in bonds, you'll see it in commodities. And when we start to see that sector story really explode, where I'm talking about airlines, you're seeing travel demand return, potentially even generating, dare I say, a little bit of inflation. That's when you'll start to see Treasury yields go back above 1%. The question is, when does that happen? I believe if you're looking at kind of Bloomberg economist forecasts, and a lot of that pricing is happening in the second quarter of 2021. But the big question for the bond market right now is simply going to be how much of a kind of pullback do you see in the first quarter of 2021? And a big chunk of that is going to be that stimulus, not the current package that we're talking about, but further stimulus rounds. You've seen President-elect Biden talk about it. Even Senate Majority Leader Mitch McConnell, who's been a key fiscal negotiator, even he's mentioned that going into the next round of negotiations, these are the things he's going to want to include. So at the end of the day, this isn't the last stimulus package that will be worked upon in Congress, and that's what markets are really going to be watching.
Yeah, hey, Vince, I'm just, we've been talking about the dollar a lot over the last couple of months, really showing some weakness, a little bit of stability here today. What's the call in the currency markets here? We've got Brexit, I guess, kind of done. We've got our fiscal stimulus done. We're going to have a transfer of power. What's the kind of, as you look at 2021 on the currency market, some of the themes that you're looking out for?
Well, a lot of people are going into 2021, and I would say the majority of the market is short dollars, with the expectation the dollar will fall, that a further stimulus, as Critty mentioned, is going to come. There's no reason for the haven trade per se. With further
And Critty, literally, Alex Steele runs from the television studio to the radio studio at this time to make our show. And we let her catch her breath, but she's now with us. Alex, thanks so much for joining us for the next couple of hours.
Yeah, what we're talking about. No, I'm kidding. Vince, you say that, and that's like a totally counterintuitive view. The real yield reversal of the dollar sell-off, like that would be crazy if that's what we really saw next year.
I think a lot of people would think it's crazy. I prefer to be in the minority camp. I never really made a lot of money trading when I was going with everybody else.
Yeah, just ask him how he trades sterling and the cable rate. He will hate you forever.
I have scars on my back from trading cable, and so does everyone else, I think, who's ever done it. No, I think, we've seen the dollar trade fight the majority tape for like the last 4 years. Whenever everyone thought it was going up, it went down, and when everyone thought it was going down, it went up. And I have just a funny feeling that's going to be the case, because it's a two-sided. To me, it's a double-edged sword for dollar shorts. If you get the stimulus, you'll see a big boost in the U.S. economy, big boost in yields. That should be dollar positive. If you don't get the stimulus and things meander, you're going to see a haven trade come on, and that's good for the dollar as well. So I'm not buying the argument that the dollar is a big sell at these levels.
Hey, Critty, just quickly, remainder of the week, anything that we should be on the lookout for? Can we just have a nice quiet week?
I wish we could. Honestly, I'm going to kind of go off the back of the conversation we just had. I think the dollar is going to be the key thing to watch this week and going into 2021, not just for the FX kind of moves you'll see, but it also echoes across asset classes. You see it happen in the stock market, in commodities, of course, in treasury yields as well. So the dollar should be the North Star for everyone.
All right, guys, thanks so much. Critty Gupta, cross-asset reporter, Bloomberg News, joining us in the Bloomberg Interactive Broker Studio, and Vince Signorella, global macro strategist for Bloomberg News, joining us on the phone from White Plains, New York. And, it's interesting, Alex, thinking about, hoping for, anticipating a nice, quiet week here. I'm not sure we're going to get. There always seems to be news.
Yeah, and definitely the move we're seeing in airline stocks today, as well as the travel stocks, a whole different thing when it comes to the stimulus passing. But, like Kriti said, is it over? We're probably going to have more of this conversation over the next 6 months for sure.
Yeah, absolutely. We will certainly be working through this week to get you right to the end of the new year and get you positioned for 2021. Now let's head down to Washington, D.C., our 99.1 studios, get world and national news with Nancy Lyons. Nancy.
Thanks, Paul. It is setting up to be a big day in the House of Representatives. The chamber plans to vote later today on a bill that would provide the $2,000 coronavirus relief payments requested by President Trump. The bill signed yesterday by the president includes checks of up to $600 for Americans who qualify. The president's delay, though, in signing that bill means that 2 pandemic-related unemployment programs were allowed to expire Saturday night. Gig workers and those who have exhausted their state unemployment benefits will lose a week of benefits. Another vaccine maker, Novavax, is starting phase 3 trials of its COVID-19 vaccine with 30,000 people across the U.S. and Mexico. Bloomberg's Irv Chapman has the latest from Washington.
Novavax is prepared to ramp up production speedily across the world when its vaccine is approved, Chief Executive Stan Erkstead in a Bloomberg interview.
We're doing something that's unprecedented, building scale in 8 different countries. We partnered with the world's largest vaccine company called Serum Institute in India. They will take care of all of the middle and lower income countries of the world. We'll use a distribution system in Europe and the U.S. that's already set up.
Based on its experience as a major producer of flu vaccine, Erkstead, the risk is small that the COVID-19 vaccine would not protect against new strains, but it could be modified if need be. In Washington, Irv Chapman, Bloomberg Radio.
Now that a suspect has been identified in the Christmas bombing in Nashville, authorities are trying to piece together what led Anthony Quinn Warner to kill himself in such a way. The explosion severely damaged dozens of downtown buildings. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Alex, looking at the numbers, the pandemic numbers, and they're still, obviously, unfortunately, still going up. And I guess with the Christmas holiday, we can look forward to, another spike in January. But on the Bloomberg terminal, there's an interesting story here. COVID-19 hospitalizations, they reached a new high this week, testing the nation's healthcare workforce, even as the virus sidelines medical workers. And you got to think about that dynamic. There's more and more patients coming into the hospitals on a daily basis, yet the hospitals themselves, in terms of the staffing, they are feeling it themselves in terms of their staffing levels, really creating a big issue for the overall healthcare system and certainly specific hospitals and certainly specific markets.
Yeah, particularly in the rural areas where you just don't have that many hospitals or nurses to begin with. And I have to wonder if it's going to be exacerbated once the nurses get the vaccine. If you just take a couple days to recover from it, or you get kind of tired, or you just feel a little feverish, like no big deal, but you don't want to maybe be at work when you do that, is that going to put a little more stress on the system as well?
Yeah, it's a difficult issue, and we've been hearing, even pre-pandemic, the consolidation in some of the hospitals across the country where, some of the smaller, more rural markets, they're having to travel, folks in those markets having to travel further and further to get critical care, and boy, did that become a real issue here with the pandemic. And so you have the issue of, do you have the proper equipment, the PPE? Then it's become, you have the therapeutics and now the vaccines, but it's always behind it has been the healthcare provider. Are they going to be there in the critical markets to serve the people?
Yeah, I don't know. Did you also read that piece by Sarah Fryer that talked about how one nurse celebrated on Twitter that she got the vaccine and then faced a huge backlash of anti-vaxxers? After all the hospital staff has been through, and then now there's that?
Yeah, that's just, I guess it just shows you, the downsides that we all know of social media, but it's unfortunate there. So, we're going to be talking about that the rest of this afternoon, trying to get the latest on the pandemic, on the virus, on the vaccines, and most importantly, the distribution of those vaccines.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Session high for the S&P 500 index. Over the weekend, President Trump had a surprise for us in approving the combined $2.3 trillion COVID-19 relief and government funding package. S&P at a record, investors cheering that aid today. The S&P up now by 35 points, up by 1%. The Dow up 241, up 0.8%. Nasdaq up 114, higher by 0.9%. The Dow, the S&P, Nasdaq are all trading at records. 10-year down 230 seconds, 10-year yield 0.93%. Gold down $6 the ounce at $18.76, a drop of 0.4%. And West Texas Intermediate crude down 1.1%, $47.71 a barrel. Recapping, session highs for stocks at a record. S&P up 36, up 1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Charlie Pellet, thank you so much. We appreciate it. Well, Alex and I were just chatting about a story on the Bloomberg about the pressures on healthcare workers here as we go into a second and third wave here, and it must just be just the ongoing cumulative pressures and on these healthcare workers is just extraordinary. Our next guest can help us talk about that a little bit in the overall home healthcare services space. Alyssa Rapp is the Chief Executive Officer of Surgical Solutions. She joins us on the phone from Deerfield, Illinois. Alyssa, thanks so much for joining us. I know your company has over 200 employees on the front lines of this crisis here. Give us a sense of what you're hearing from them. I mean, this is month 10, and it looks like we're going to have 3 more difficult months ahead of us. How are they doing?
Well, thanks for asking, and thanks for having me back, Paul and Alex. You know, it's been a crazy and wild year for frontline healthcare workers. I was looking this morning at our volume of the number of surgeries they've supported from November of 2019, 8,000 a month. It then dipped and plummeted to 2,000 in April. And starting in July and August, it was back, and now we're up above 115% of our annual volume from last year because people are rescheduling those procedures that were canceled or trying to get them in before their year-end deductibles are refreshed. So how would I feel or you feel if we had been on that roller coaster ride, exhausted, a little burnt out, motivated by the mission of the work and serving the end patient and anxiously awaiting the vaccine? It's been a heck of a year.
And it feels like it's going to be made even worse in some ways. We have this new strain of COVID that was discovered in the UK that hasn't been reported here yet, but by all admissions, like there's no way it can't get here at some point, right? Or it might be here already. What are you hearing about that from your online workers?
Yeah, so what I am hearing is that people are cautiously optimistic that the current vaccines will vaccinate against the current strain and those less virulent but more fast-spreading strains or mutations. So they're not as afraid of the mutations. What we're all concerned about for our 250 people in 35 hospitals in 9 states is when are they going to get the vaccine? And they're in the front line to get it in January, but they're not there yet.
Yeah, that's kind of where I want to go, Alyssa. I think, we all in the euphoria of the last month or so of these Pfizer and Moderna vaccines, a number that I seem to have been the acceptable number out there is maybe 20 million vaccinations by the end of calendar 2020. I think we're nowhere near that. What is your sense of how this is rolling out in some of the early days here?
Great question, Paul. So what we are seeing is that about 20% of each hospital's eligible staff is getting vaccinated or has been already. What does that mean? You're an ER worker, you're an ICU worker, or you're a surgeon, you have probably been vaccinated if you are in a major metropolis or a market that has access to the vaccine. If you're the other 80% of the essential workers, you're getting it next. But you probably haven't had that first shot yet, by and large. So that's great that we're making progress. What we need is more progress faster.
Are you hearing anything about individuals not wanting to take it in the healthcare profession?
It's interesting, and our team is, frontline support for minimally invasive surgeries, and we have a roster of vaccines and immunizations our team has to get before they go into any hospital, and the hospital's policy about vaccines is what governs ours for our team. And so in these hospitals where it's required of their staff, there's really not been any pushback of when our team is getting it. If anything, it's the contrary. Are we on the list to get it when our run of essential worker gets vaccinated? And the answer is yes. I'm sure there will be pushback, but when you are on the front line and you are knowing how exposed you've been, I haven't seen it yet with our team.
So, Alyssa, let's switch gears a little bit. PPE, that was such a big problem in the initial wave back in March and April, and it really underscored kind of the risk to the supply chain, if you will. Well, here we are, fast forward 10 months later. Where are we in terms of PPP within the healthcare system to deal with these rising numbers?
I can speak to this anecdotally, not nationwide, but anecdotally, we saw a dearth of PPE in all major markets when this first hit, like everybody did. And then those major metropolises, again, New York City, Chicago, LA, San Francisco, stockpiled. And so those markets are now flush with PPE, but where we're seeing a shortage now, 8, 9, 10 months later, is in more rural markets and more small regional hospitals. That's where our folks have said they're starting to see a decline. And we have our own corporate stockpile just in case our people need it. We want them armed with the right artillery to go to battle, so to speak. But we've heard the pinch the greatest so far in rural America, not in the major metropolises.
Just anecdotally also, what area right now is worse off?
That I don't know. I think that it depends how you define worse off, right? I think that the major metropolises are going to see higher numbers by definition, but it's all about preparedness and also the rate of positivity. So the first wave in the Q2 hit those dense urban markets the highest, where the smaller markets were not as scathed. And here we are. We saw a big pop in those secondary and tertiary markets in October and November, because that's when it hit. That first wave was really their first wave. And so now I don't want to say calming to a dull roar. The numbers are the numbers. We all see them. But I think people are more prepared. And I'm just hopeful that the vaccine can come in a more widespread manner before there, as you said earlier, a third, fourth, and fifth wave of this thing.
So, Alyssa, just in the next 20 seconds, where are your people mostly deployed? Are they smaller, more rural markets, maybe where they're understaffed?
No, actually, we have 40% of our team in New York City, and then we also have them in big markets like Houston, and then a large number in Kentucky and Louisiana and upstate New York and other places. But no, we sort of see both extremes: the large urban markets and the smaller regional ones.
Hey, Alyssa, thanks so much for joining us again. We always appreciate your perspective here on this unfolding story as that moves from, just trying to deal with it on a day-to-day basis to therapeutics and vaccines. So we appreciate your thoughts. Alyssa Rapp, Chief Executive Officer, Surgical Solutions, joining us on the phone from Deerfield, Illinois. And again, Alex, interesting, we're going to be seeing how this vaccination rollout plays out over the coming weeks and months, and hopefully it can go smoothly so we can do it as efficiently as possible. More to come. This is Bloomberg Business Week.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
You are listening to Bloomberg Business Week. I'm Paul Sweeney along with Alex Steele. We are sitting in for Carol Masser. And Alex, we do have a fiscal stimulus plan. $600 is coming the way of many citizens, but there's still folks, they're still discussing $1,200. So we're going to have to get the latest on that.
Yeah, and also with the $2,000 that President Trump wanted that confused everybody last week, including markets. It seems like the House is going to vote on that today as well. So we'll have to figure out where we go from here and where that leaves President Biden, really.
Exactly right.
President-elect Biden in a couple weeks.
That's exactly right. We're going to have more on that coming up. Right now, let's get Bloomberg Business Flash with Charlie Pellet.
All right.
Charlie.
Thank you very much, guys. And here's what's going on. Got to begin with the stimulus. That's what's sending stocks higher today. Equities rallying after President Trump over the weekend backed away from earlier threats and signed that coronavirus aid package. Right to the numbers. S&P 500 index at a record up 35, up by 1%, bringing its year-to-date gains to 15.73%. The Dow's up 233 now, up by about 0.8%. Also a record there. Nasdaq up 121, up by 1%. 10-year down 3/30 seconds. 10-year yield 0.93%. Gold is down $8 the ounce now, down 0.4% at $18.75. And West Texas Intermediate crude down 1.3%, 47.62 a barrel on West Texas Intermediate crude. The United States has distributed more than 1.9 million doses of COVID vaccines, primarily at hospitals and nursing homes, according to the CDC. Dr. Joshua Sharfstein is Vice Dean at the Johns Hopkins Bloomberg School of Public Health, and on Bloomberg Television and Radio this morning, he told us clearance of additional vaccines from Johnson & Johnson and AstraZeneca will help get vaccines to more people.
Well, I think authorization of more vaccines is going to help, first of all, for supply, because there'll just be more vaccine around. Second of all, because they're easier to move around, and they can go in smaller groups, like the Pfizer requires this huge batch to be defrosted at the same time, which is hard for a small clinic to handle, for example.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Checking some of the vaccine names, Pfizer shares are lower, down 1.4% right now. Germany's BioNTech lower by 8.4%, and Moderna is down 7.3%. Again, recapping, equities are at records with the S&P up 36, up by 1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Charlie Pellet, thank you so much. Well, we did finally get that fiscal stimulus bill passed and signed, although it was an ugly process over the last several days. You had weird coalitions. On one day, you had the president with the Democrats, and you had the Republicans not with their president, but it all got said, all got done there in the end. Let's get the latest. Let's dig under the hood. We can do that with Laura Davison, congressional tax reporter for Bloomberg News. She joins us on the phone from Washington, D.C. So, Laura, we did get a plan. Talk to us about the stimulus payment. That seems to be the real bone of contention here between all parties involved.
Yes, so similar to the CARES Act back in March, this bill has another stimulus payment, this time $600 for adults and for children. Last time it was $1,200 for adults, $500 for children. But otherwise, the eligibility is relatively similar. If you make less than $75,000 as an individual, you'll get that full payment. Twice that, $150,000 for a married couple, you'll get that full amount. And there's a phase out. So, for about $20,000 on top of that, there's you'll get a diminishing amount below that $600. But this is still very much a live issue. There is a vote planned in the House of Representatives tonight that would increase that amount to $2,000, both for adults and children. Unclear how it will fare in the House. However, the prospect for this passing Congress is not likely. The Senate is not likely to bring this up, or if they were to, it would likely not pass that chamber.
Is $2,000 on the table for like 3 weeks from now?
That is a good question. Obviously, there will be a change of administration come next month.
the question really hangs in the balance of, what happens in Georgia. There's that runoff election for both Georgia seats that will determine the control of the Senate, and that will really sort of be a deciding factor in terms of, what can get done legislatively, what sort of political appointees are able to pass the Senate and join Biden's administration. So there's a lot of question mark about, not only, what can be done politically, but also what the state of the economy and the virus and the vaccine will be, and what the calls will be for in terms of what parts of the economy need boosting at that point.
So, Laura, you've covered this Congress thing for a while. What do you make of the seemingly lack of coordination and cohesion between the White House, their Republican colleagues, and then the Democratic Party? It just seemed like the president really pulled the rug out from under his own party.
He really did. Congress is known for chaos, but even by Congress's standards, this was quite bizarre. It has created some really weird factions where you had Democrats, when President Trump said, hey, I want $2,000, they were like, great, we've been saying this for months. Let's take a vote on it. And Republicans were put in a very awkward position of, having negotiated actually for a lower stimulus payment rather than a higher one.
Yeah, they're definitely. When I saw that headline last week, I was on vacation. I was like, wait, what happened? What?
Exactly.
I mean, usually you go away, nothing happens. You come back, everything's the same. So what else is in this bill that we need to know about? I feel like we've glossed over kind of what's happening for the sectors that need to be bailed out again, that are the ones actually rallying today.
Yeah, so there is a new round of PPP, that Paycheck Protection Program money, to kind of go out to small businesses across the board. They're specifically targeted some money to very small businesses, minority owned. There's a pot of money for stages, for live performance venues, which have lobbied hard, saying, hey, look, we've been closed for months and really unable to do anything. There's some additional airline aid, and there's also, very importantly, another round of unemployment benefits, these sort of enhanced federal benefits to help people who are out of work and kind of keep them afloat for the coming months.
So on the PPP side, Laura, there was some concern and some criticism last time that it didn't really get to the small and mid-sized businesses that really needed it. For example, if you didn't have a relationship with a bank, it was very, very difficult to get the funds. Is there any modification to the plan this time, as far as we can tell?
There's several things that they did, and advocates who are pushing for those changes are hopeful that small, those very small businesses will be able to access the funds. They changed the fee incentive structures for the banks who are actually making these loans, processing these loans, so that they wouldn't necessarily benefit or be incentivized to take only big loans and not take small loans. There's a certain part of the money that's earmarked for these very small loans, and they've also just made the process a lot easier for the businesses applying. There is some concern that there is some reputational risk with the program. Of people have heard that it's complicated, that it's hard, that the rules change, and some businesses may be scared, though there's a lot of effort sort of in the small business community development world trying to get businesses who are hurting to go ahead and apply for this money.
Hey, Laura, thanks so much for joining us. We really appreciate it, clarifying what's coming out of Washington here in terms of that fiscal stimulus. Laura Davison, congressional tax reporter for Bloomberg News. She joins us on the phone from Washington, D.C., and there's a lot of moving parts there, Alex, but I guess this is a good first step, and then we'll have to just wait and see what the Biden administration, what strategy they want to take in terms of fiscal stimulus. Presumably, they're going to want to be more aggressive here, but I guess we'll have to wait and see what happens, certainly in Washington, D.C., to make it the makeup of Congress. Right now, let's head down to Washington, D.C., to our 99.1 studios. Nancy Lyons with World and National News. Nancy.
Well, Paul and Alex, you've been talking about it. The House is set to vote later today on whether to replace the $600 stimulus payments in the newly signed pandemic relief law with the $2,000 checks requested by President Trump. It needs two-thirds support to clear the House. It's unclear if it has that. Former Treasury Secretary Larry Summers is among those who say it's a bad idea.
We're debating whether Donald Trump's new idea that hadn't been in the political and economic debate before 2 weeks ago of giving out $2,000 checks to everybody is the right way for government to protect people and enlarge their opportunity. And I don't think it is.
Summers tells Bloomberg more targeted assistance to those really in need is the better way to go. Authorities in Nashville say they do have a suspect in the Christmas Day bombing that shook the downtown area. Police say Anthony Warner was killed in the blast, and investigators are now searching his home for clues about a motive. David Roush is director of the Tennessee Bureau of Investigation. He says they're looking into whether the AT&T building was the target.
His father did work for AT&T. That detail of that is still being followed up on. Interviews are still being conducted to determine, if that plays in any whatsoever into the motive.
Actress Lori Loughlin is out of prison. She was released today after being behind bars for 2 months. She admitted to being part of that college admissions scandal. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Well, Alex, one of the big issues during this pandemic is how do we educate our children? Do we open up schools? Do we get them back into schools? And it's been a real, almost state by state, city by city, locality by locality issue. But there's an interesting article in the Terminal today talking about some of the boarding schools across the country and what they're doing. And effectively, they just said, a boarding school is very much like a college. Kids live at the school. They have their own community. And most of these boarding schools are really trying to get students back, and they've generally been successful. And I went to a boarding school, and I could tell from my own experience, the kids did come back this year, and they've done a relatively good job in keeping the infections down and keeping the kids in class, in their activities. But it's been a challenge for everybody, to try to keep the schools open.
Well, also because, supposedly you can't drink because you're not 21, and they have more control over the kids' lives versus college, which is much more discretionary for the kids. It was interesting to see what Exeter, for example, in this article talked about. They're in New Hampshire, and they said they cut down on the number of students that were in dorms. They rented out a local inn for the year, making it student housing. There was no off-campus sports. There was on-campus sports got modified. Masks were mandatory. So things like that you can control that maybe you couldn't on a college campus.
Yeah, it's interesting. You make a good point about being able to, I think, have a higher level of control over high school kids than you would college kids.
In theory.
Most of them are adult. Yeah,
on
exactly.
paper.
Yeah, having been to a boarding school for 4 years, I have a couple of stories. But it's interesting. It's such an important, the residential life parents make that really, really important life decision with their children to do a residential boarding school experience, and that being at the school is all part of it. I mean, it's really a big part of it.
But
so it's
you could also say
it's
a lot of inequality also. I mean, Exeter costs $57,000 a year.
Yep,
so you can live in a bubble and do well if you can pay $57,000 a year.
Right. It's exactly right. It's just exacerbating what for many is that inequality that we see across society, including the educational side of the equation. Well, but an interesting story nonetheless.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We are looking at records with the Dow, the S&P, Nasdaq, all advancing on this back-to-work Monday. Shares of mega-cap technology and internet companies up, with the group extending strong 2020 advances. Among today's standout, we have got shares of Apple trading at a record. Apple shares, they are rallying now by 3.67%. Apple is at 136.82. Apple on track for a record close. Nasdaq, let's begin there, because year-to-date, Nasdaq is up 44.1%, up today by 1%, higher by 123 points. S&P up 37, a gain of 1%, bringing its year-to-date gain now to 15.8%. The Dow up 245. For the Dow, that is a gain of 0.8%. Tenured on 3/30 seconds, 10-year yield 0.93%. Gold down 0.4%, 18.75 the ounce. And West Texas Intermediate crude down 1.2% today, back below $48 a barrel, 47.65 on WTI, lower by 58 cents. So it is an update on Wall Street with the stimulus signed over the weekend. Investors cheering on that news. Again, recapping here, S&P at a record, up 37 points, a gain of 1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Charlie Pellet, thank you so much. We appreciate it. Fascinating story, Alex, in the Bloomberg Business Week magazine about private equity getting into the healthcare business via medical practices, private medical practices, and trying to consolidate that business a little bit. Let's dig into that story. We could do that with Joel Weber. He's the editor of Bloomberg Business Week. He joins us on the remote line from Brooklyn. And Heather Perlberg, private equity reporter for Bloomberg News, on the phone from Washington, D.C. Joel, interesting here. Private equity's just got tons and tons of capital on the sideline. And I hadn't heard them getting into this type of business, into the healthcare space, generally speaking, too much. Give us a sense of what you guys were looking at.
So this is a line of reporting that Heather's been working on all year for the magazine. And you're right, Paul, because it's not a space that everyone associates with private equity. But private equity has been very, very strategic in what are called basically roll-ups, and going into medical practices and that are often disparate in an attempt to put together a network. And what's interesting, particularly about this story, as Heather dug into the topic, was, and she's covered the roll-ups before, but what comes with the roll-up, now that private equity owns your doctor, is the same strategy that they've often used on Wall Street, which are these arbitration agreements, which is a real favorite technique of Wall Street. And now they're bringing that same thing into medicine. So if you want to see a doctor, you will have to sign an arbitration agreement. And Heather, why is that a strategy of importance that not only investors should know about, but patients?
Well, basically, for the investors, it lowers their costs. It's private equity, so they're always looking for kind of the next cost-cutting mechanism, and that means malpractice insurance is cheaper for them. And the reason it's cheaper is because patients are waiving their rights to a jury trial, and arbitration often comes with these far lower awards when patients are injured.
Isn't that like a good thing, in that can't they pass those costs on to their client, to the people going to see the doctors? I mean, I know we love to hate on private equity, but like, where's the good here in this one?
Well, I think it's just a matter of how much you want an investor or Wall Street generally interfering in the doctor-patient relationship. There's a lot of doctors who have said they're not comfortable with these agreements. They think they kind of turn the patient off and generally aren't great for them because it limits some of their rights as well to kind of pick their own attorney, and they like to clear their own name if they feel like they haven't done anything wrong and make that a public record. And this kind of quietly settles things the way it does with sexual harassment cases. And from the public's point of view, you want to know where you can go to get the best care.
So you have an amazing character in your story, Heather, and this is a woman named Jessie Harrell. Can you walk us through how you found out about this and what her backstory is?
Sure. So Jessie Harrell is a lawyer, and she actually took a case all the way up to the Florida Supreme Court and won, representing a woman with a really sad story. She had a stillborn baby and then tried to sue her OBGYN, who then went back to her and said, well, guess what? You signed this binding arbitration agreement and we're going to enforce it. So she went up with a colleague of hers against this group, Women's Care, and won. And in the few years since she went to her regular annual exam at her own doctor, hadn't realized that her gynecologist was acquired by the same group and that they were still using the agreement that the Supreme Court said was unenforceable.
So, Heather, how big of an issue is this? Like, how many do you think practices are actually using this type of arbitration? Is this a widespread thing, or is it kind of in its infancy, but it's something that everybody should be aware of and be on the outlook for?
The frustrating answer to that question is we don't quite know, because so much of this is done quietly and sort of kept secret, the forms that patients are asked to sign. But if you use this group as an example, I mean, they already own more than 100 practices in Florida. They've just announced a sale to a larger private equity firm that's going to expand it even wider. And lawyers in Florida and other states are saying that they are starting to see these agreements crop up in some specialties that they would call higher risk for doctors being sued, like obstetrics and plastic surgery. They're very common in nursing home admission packages, which private equity has been a large player in consolidating as well.
So bring it back to Harold and sort of what her story is. I mean, she basically takes something all the way to the Supreme Court, then goes and sees her own doctor, and the very thing that she had fought and won, she has to see again. So where's this? What do you do as a patient when you see something like that? What did she elect to do?
She was floored. I mean, she was shocked to see that they were still using it. And, you know, this doctor she had seen for 14 years, delivered her first child in an emergency C-section. And he basically said to her, look, I mean, I can't do anything about it. This is the sort of corporate policy now that we joined this group. And they had to part ways, and she had to find a new doctor. So she was sort of heartbroken about the whole thing. And there's plenty of women still going there that are opting out and having to find new doctors, and a lot of other ones that don't quite know what they're signing.
So when you step back about this, Heather, and you've done multiple stories sort of about PE in healthcare, what's the takeaway from you on this story?
I think that they're just farther reaching than most people realize. I mean, like you said, I've done a lot of reporting on this, and in that process, on a personal level, I have found out half of the doctors my family goes to were bought by private equity, and I didn't even know it. I've been writing about this for years. So just because of the sort of cloud of secrecy, it's hard for patients to know when a firm buys their doctor and what that actually means for them. And I think just because of the lack of regulation, a little bit more transparency would make it so people can actually make that choice.
Hey, Heather, thanks so much for joining us. A fantastic story, really interesting. Heather Purbrook, private equity reporter for Bloomberg News on the phone from Washington, D.C., and Joel Weber, as always, editor, Bloomberg Business Week, on the remote line from Brooklyn, New York. Just a fascinating story, private equity getting into, the retail health business, if
also,
you will.
Paul, even if they told you, like hundreds of forms that you read, like I don't read those things.
No. So we'll have to see just another thing. So for those of you listening in New York, D.C., and San Francisco and watching on YouTube, Bloomberg Business Week continues. If you're listening on Bloomberg 106.1 in Boston, Bay State Business is next. More coming up. This is Bloomberg.
From Bloomberg World Headquarters, I'm Charlie Pellet. We move into the final hour of trading on this back-to-work Monday, holiday shortened trading week. But right now, we are looking at records after President Trump over the weekend backed away from earlier threats and did sign a coronavirus aid package. S&P, Dow, Nasdaq touching records following Trump's surprise approval of the combined $2.3 trillion COVID-19 relief and government funding package. S&P 500 index right now is up by 36 points, a gain of 1%. The Dow up 238, a gain of 0.8%. Nasdaq up 122 points, higher by 1%, extending its year-to-date gain now to 44%. 10-years down 2/30 seconds, 10-year yield 0.93%. Gold is down 0.4%, $18.75 the ounce, and West Texas Intermediate crude down 1.2%, $47.65 for a barrel of West Texas Intermediate crude. So we are looking at records as investors cheer the stimulus news. Kathy Jones is chief fixed income strategist at Charles Schwab.
And I think ultimately it pushes up bond yields. We've been hovering right below 1% here in 10-year Treasury yields. If we continue to see inflation expectations move up and signs of increased recovery, by the end of 2021, we could be close to the 1.5% area.
And today, the 10-year at 0.93%. Airline stocks pushing higher. Southwest says it will rescind plans to cut jobs and wages next year now that new federal payroll support is coming through, averting what would have been the first worker layoffs in the carrier's history. U.S. Airlines will get $15 billion to pay workers as part of the package that President Trump signed into law yesterday. The measure funds employees' wages through March 31st. Checking some of the airline names today, Southwest is up by 0.1%. Little change now at 46.32. UAL is up by 1.6%, higher by 68 cents at 43.94. And we've got American Airlines up 2.9%, Delta up 1.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
You're listening to Bloomberg Business Week with Carol Masser on Bloomberg Radio.
Let's take some time and talk about the global oil business. When you think about all the commodities out there that have been, swinging around during this pandemic on news as it relates to the pandemic metrics, as it relates to vaccines, crude oil has been one of the most actives, and clearly it's a bellwether, and it reflects on investors' belief about when this economy will begin to open. Let's get the latest. We can do that with Professor Brenda Schaefer. She's a research faculty member at the U.S. Naval Postgraduate School, also a fellow with the Atlantic Council's Global Energy Center. She joins us on the phone from Washington, D.C. Professor Schaefer, thanks so much for joining us here. We've seen oil kind of rally up to the high 40s here in terms of WTI, but it really seems to be driven by demand, or the perceptions of demand going forward, as opposed to supply a little bit. We know it's a commodity and it's a demand-supply issue, but it just feels like it's being driven by demand. How do you view the global oil markets right here?
Thank you. Yeah, but I think that there's, we're back up to the pre-COVID, oil price rate, back up to the rates of March. So it's definitely a confidence in the direction of where the general economic trends are going. But I think that there's two big picture trends that are going to emerge post-COVID, and it's pretty clear to anyone, trading in oil. One is that we're not going back to the same rates of public transportation. So even after the vaccine, after people return to work, they're not going to return to the same rates of use of public transportation. That fear will probably linger for a long time. And the second is the use of plastic. So if we would almost already factored in 2018, 2019, sort of a general global decline in demand for plastics with, different environmental goals, and commercial goals, it's clear that plastics, so demand will be high, and plastics, the main is a sector that uses a lot of oil to produce it. So these are two things that won't change, that, dependent, regardless of what happens going forward with the pandemic, with the economy, we're not going to see a return to the same levels of public transportation or a decline in demand for plastics.
Can other things offset that? So diesel, for example, or other petrochem products?
Yes, I think the specifics, for plastics that, right now with current technologies, I don't think we'll see a big change in that trend.
But there are on the supply side a couple more short-term things that could affect the market. One, we have OPEC Plus meeting again in January and reevaluating their strategy. It looks like Russia actually wants to up production, which would mean downward pressure on the price. And this is in order to preempt U.S. shale from recovering and coming back in a big way to the market. And then a second big question mark is that if the incoming Biden administration will quickly go back to an agreement with Iran, will allow more Iranian oil into the market, how quick Iran manages to up its production if that takes place. So on the supply side, there could be more oil coming into the market in early 2021 that would affect the price. But those bigger issues on the demand side probably won't be moved.
So, Professor, do you think some people raised the issue, prior to the pandemic that perhaps the world had seen peak oil. What is your view there?
As my students know over the years, I don't believe in peak anything when it comes to oil. So I mean, basically having a finite of anything, whether it's finite supply or finite demand, I think it's very, it's very difficult to conceive of that. So it used to be we were talking about peak oil, we meant about peak supplies, and that was completely debunked. We were awash in oil, from 2014 to about now. So debunked that, and then we had to have a new peak theory, which was peak demand. I see it doesn't as much. We often talk about energy transition, energy transformation as if it's a fact. Sure, many things are happening, but still in the transportation sector, especially with this new lingering fear of public transportation, I think we're far away from decoupling our activities from oil in the transportation sector.
I mean, totally right on. I mean, look at like SUV sales are bananas. I mean, EVs are great. Okay, you're going to have more subsidies. You're going to push them out, etc. Maybe you'll have some charging stations, but people just really want to buy SUVs. And we'll get to the specific of the energy plan that was passed in a moment. But I mean, does gasoline have a real life here, real future?
Yeah, definitely. I mean, it's not even. I agree with your point about larger cars, but we're even seeing sort of a revival of the used cars and the industry of car parts and repairs, because the same people that were riding the bus and the metro, they might not be buying a new car. So it's really a renaissance of those industries as well. And yes, and still not, people can't afford. There's the same kind of people that are moving from public transportation to a private vehicle. Probably can't afford electric cars regardless of the subsidy.
And then quickly, are we going to see a point where we don't have enough oil for the demand that we're going to meet over the next 2 years or 3 years?
Well, we will have enough oil, but it might come at a price, and that's why there is a big chance that what has happened over the past year, and even more or less over the past 6 years, when there's been many periods of low oil prices, that there haven't been a lot of investments in new oil. So now that demand is going up, there isn't necessarily new production there to meet the demand. So what will happen? Prices will go up. A big question mark is how fast U.S. Shale production will reappear, because it basically it has the ability relatively to swing back faster than a lot of other places. And that could be a modifying impact on the global oil price. But it's not clear how much investor appetite there is to go back to the shale, because more people have lost money on that than gained.
Professor, stick around with us. We're going to come back. We're going to do some news, and we're going to come back and continue our discussion on the energy markets. A lot to talk about with the Biden administration coming in. Professor Brenda Schaefer, research faculty member at the U.S. Naval Postgraduate School, also a fellow with the Atlantic Council's Global Energy Center, joining us from Washington, D.C. Right now, let's head down to Washington, D.C. for world and national headlines with Bloomberg News.
Thanks, Paul. The House is set to have a busy afternoon. Members are scheduled to vote later today on a measure that would provide a $2,000 stimulus payment to Americans after President Trump demanded it last week. He signed a bill yesterday that provides up to $600 for eligible Americans. The House is also set to attempt a veto override vote after President Trump rejected the defense spending bill. Well, President Trump's ongoing bid to overturn the election has gotten a front-page rebuke from one of his biggest backers. Bloomberg's Nathan Hager has more from Washington.
This morning's New York Post headline, Mr. President, Stop the Insanity. The New York City tabloid's editorial board had endorsed the president's re-election bid. Now they're telling the president it's time to end this, quote, dark charade for his sake and the nation's. Before the election, a Post columnist called President Trump an invincible hero. The paper also made the controversial decision to publish an expose on the contents of a laptop said to belong to President-elect Biden's son, Hunter. But since Biden's victory, the Post has been backing away from Trump and his unfounded claims of election fraud. In Washington, I'm Nathan Hager, Bloomberg Radio.
Well, some healthcare providers are distributing coronavirus vaccines to people not prioritized under state and federal law. And New York Governor Andrew Cuomo says he's taking steps to rein that in.
A provider could be fined up to $1 million and revocation of all state licenses, which frankly may be more of a deterrent than the $1 million.
He says New York State Police will be leading investigations into healthcare providers who are not being honest about their distribution plans. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Well, Alex, here's a story that's one of our most read stories on the Bloomberg terminal. I think I know why. It includes hedge funds, cryptocurrency, and the SEC. The SEC here says it has imposed an asset freeze on Virgin Capital and charged its owner, Stefan Quinn, with securities fraud related to a cryptocurrency trading fund. So it just kind of brings into all these issues that are really hot topics in the market here. Cryptocurrencies, you see Bitcoin trading over $27,000. Just we're at a time here where these cryptocurrencies are just once again back on the front burner, and I guess the SEC recognizes the risk for some malfeasance there. So going after a fund right here.
Malfeasance. What a wow! I'm so impressed.
Yes.
Nice work. Yeah. Apparently, the SEC says that Quinn and those affiliated with Virgin Capital, the entities affiliated, I should say, have been defrauding investors since 2018 by misleading them regarding the Virgin Sigma Fund LP's strategy, assets, and financial condition. I honestly don't really know what that means, but that is what they're being accused of. But I think this is also potentially a case of, particularly with cryptocurrency, moving more quickly than government. So when that happens, things like this happen.
Yeah, exactly right. And as you think about the cryptocurrency thing and Bitcoin in particular, it's had its ebbs and flows and peaks and valleys in terms of interest, in terms of obviously the price, in terms of the volume that people are getting into some of these assets. But I always make the observation that a couple of months ago I started hearing on talk radio, sports talk radio, instead of talking about the Jets or the Giants, they're talking about Bitcoin, and that's kind of the test where you're like, oh boy, this might be getting a little frothy.
Is this the anecdote like in 2000 that it was when the cab driver starts asking about tech stock? Is this what you're equating it to?
Exactly right. So, but I tell you, if you just obviously take a look at the chart of XBT currency on the Bloomberg terminal, that is a very, very good chart here, and a lot of folks are very bullish, including Mike McGlone from Bloomberg Intelligence, and he knows a thing or two about that stuff.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. 43 minutes to go until the closing bell. The Dow, the S&P, Nasdaq holding close to session highs. We're looking at records. Let's head right over to the first word breaking news desk for today's afternoon call. Here she is, Kriti Gupta.
Good afternoon, Charlie. Stocks trading higher ahead of the close at those record highs, like you mentioned. The Dow up 238, S&P 500 up 36, and the Nasdaq up 122. U.S. 10-year yield at 93 basis points, with gold trading lower by 10. Small caps up 0.1%, with 10 out of the 11 S&P sectors trading higher. That price action led by gains in consumer discretionary and telecom, with energy leading on the downside. Nasdaq biotechs falling 51 points, transports gaining 23, and semis down 3. The VIX at 21.5, with WTI crude futures down 1.2% on the day. Looking under the hood, the Dow led by United Health and Apple, with Salesforce and Bank of America lagging. Wrapping things up, we're seeing low volume, light liquidity, with all eyes on Washington and that 5 p.m. House vote on those $2,000 stimulus checks and other provisions. Live from the First Word breaking news desk, I'm Kriti Gupta, in for Bill Maloney. Charlie, all yours.
I thank you very much. And to hear live breaking news over your Bloomberg type squawk, SQUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Charlie Pellet, thank you so much. We appreciate that. Let's continue our discussion, all things energy. We do that with Professor Brenda Schaefer, research faculty member at the U.S. Naval Postgraduate, also a fellow with the Atlantic Council's Global Energy Center, joining us on the phone from Washington, D.C. Professor, want to continue discussion and kind of go to the fact that we are going to have a new administration in the White House in a little more than 3 weeks. What does that mean for the U.S. energy policy, do you believe? What have you heard from the Biden campaign and maybe what we know about his past policymaking?
Yeah, thank you. I think that the ability of the federal government in general to influence at least U.S. energy production is limited relatively to the states. So we debate it a lot, we talk about it a lot, but at the end of the day, most of the regulation of U.S. energy production is by the state structure. So, clearly there's going to be on the formal level, more of a emphasis on climate policy and return to the Paris Agreement. But I think on day-to-day things that affect U.S. oil production and oil and gas production, we might not see any dramatic changes. And it is quite interesting that under the Trump administration, even though there wasn't a formal policy of promoting climate aversion or promoting renewable energy production continued to grow significantly. Under to the Trump administration, U.S. emissions relative to the economic growth continued to decline. So really the most important signal is actually if there are policies that are both economic, it doesn't really matter. Or it doesn't matter significantly what the political framework is. And I think the best example is how the switching in the United States of the electricity production from natural gas to coal. So this is, without any policy, simply because natural gas has been cheaper in most markets. Power producers have decided to go from gas from coal to gas, and this lowered U.S. emissions as low as U.S. air pollution, regardless of government policies.
Well, and to that point, I mean, even in the budget that is set to be passed today, there's like $23 billion that was for solar and wind, even though it's a Trump administration, also for carbon capture, et cetera. And I think that something that's nuanced here is that if you get a lot of money going into this technology like carbon capture or direct air capture, where you're basically just sucking carbon out of the air and then having to recycle it, that's actually an oil story. Like oil companies are the ones that are actually spending to do that because in part they have the infrastructure.
Yeah, I think it's a great point that how much, many things, because of Congress's support, are not contingent on, who happens to occupy the White House. But also I think, that sometimes we lump all together all fossil fuels as if, oil, natural gas, and coal are the same thing. And I think that we're already seeing sort of maybe a backtracking in Europe on this, because why has the U.S. been so successful in lowering air pollution, lowering carbon emissions? It is this easy and, cheap transference from use of coal to natural gas. And Europe didn't adopt the same policies. They tried to sort of skip the fossil fuels, skip natural gas and go, directly into renewables as the way to lower emissions. And they have not been, despite all their, being part of the Paris Agreement, all the global agreements, having all the rhetoric, they have not been as successful as the United States in lowering pollution and lowering carbon emissions. So I think we might be seeing a rethinking of natural gas that really, even though it's a fossil fuel, it does have such a lower climate impact and pollution impact than the alternative fossil fuels.
So, Professor, presumably under a Biden administration, the economic relationship between the U.S. and China will improve, and perhaps we'll see trade levels pick up. How does energy fit in to the U.S.-China relationship?
Yeah, well, I think it's still early to call, how the U.S.-China relationship is going to change. I think that due to the pandemic and seeing the vulnerability of U.S. supply lines on critical products, being abroad, I think there's something that there is bipartisan consensus that the sort of U.S. dependence on China needs to change. So it's not really clear, I think, exactly how if trade relations will go back to the sort of Obama era type frameworks, or if we're really in a sort of a new stage. But clearly, sure, energy. The U.S. Natural gas exports are often touted as something that helps U.S. allies improve their energy security. But some of the biggest consumers of U.S. energy exports are actually China or not necessarily countries that are have energy dependence or security supply issues. So clearly for the case of natural gas, the trade policies really matter.
Do you expect this to be quick in the U.S. in a way that they can catch up to Europe at all?
In terms of the climate policy?
In terms of real money going to real places.
Well, I look more on the global aspects of energy, but I think we should be really result driven versus process. So again, if you take something like the Paris Accords, clearly the Biden administration will go clearly back to the Accords, but that won't necessarily change much in the United States, because again, the U.S. has been doing a lot, the market itself, to reduce emissions and reduce pollution.
Professor Brenda Schaefer, thank you so much. We appreciate that. Research faculty member at the U.S. Naval Postgraduate, also a fellow with the Atlantic Council's Global Energy Center, joining us on the phone from Washington, D.C., giving us the latest geopolitical impact for global energy. This is Bloomberg.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
This is Bloomberg Business Week with Paul Sweeney and Alex Steele sitting in for Carol Masser. Coming up on, we're going to take a look at the pension business. How do you make returns for your pensioners in a world where there's such low interest rates? So
I have no idea. We should talk about that.
How you do that.
Good question, Paul.
We're going to have more on that coming up. But first, let's go to Charlie Pellet and get a Bloomberg Business Flash. Charlie.
Hi, thank you very much. And again, happy Monday to you both. Do want to begin with some headlines out of California. Governor Gavin Newsom says stay-at-home orders in Los Angeles are likely to be extended. L.A. County is seeing 12 to 15,000 new coronavirus cases per day, according to the governor. Governor Newsom says, quote, it is taking a big toll on hospitals. So again, the governor saying stay-at-home orders in Los Angeles are likely to be extended. We are looking at an update on Wall Street, on track for record closes today. Equities surging after President Trump backed away from earlier threats and signed a coronavirus aid package. Right now, the S&P 500 index is up 33 points, up 0.9%. The Dow's up 213, up 0.7. Nasdaq is up 110. For Nasdaq, that is a gain of 0.9%. 10-year down 132nd, 10-year yield 0.92%. Gold is down 0.5%, 18.73 the ounce, and West Texas Intermediate crude down 1.2%, 47.66 for a barrel of West Texas Intermediate crude. The U.S. has now distributed more than 1.9 million doses of COVID vaccines, primarily at hospitals and nursing homes, according to the CDC. Dr. Joshua Sharfstein is Vice Dean of the Johns Hopkins Bloomberg School of Public Health, and he told us this morning right here on Bloomberg Radio, the challenge is now vaccinating people who are harder to reach.
For example, older adults live in homes, they live in assisted living, they live in senior housing, and as you get into essential frontline workers, they live everywhere. How to actually set up vaccination in a way that they feel comfortable going, that they can really access despite, working full-time jobs. All that requires a very strong public health system, and we just got the funding yesterday for vaccine distribution in this country. So I think there are going to be hiccups around the country.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. And among some of the vaccine names today, Pfizer shares down 1.5%. BioNTech out of Germany, BioNTech is down 9.7%. Moderna dropping now by 9.1%. Recapping, stocks are advancing. S&P up 32, up 0.9%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Charlie Pellet, thank you so much. We appreciate it. A fascinating story on the Bloomberg terminal today, talking about the defined benefit pension business, the retirement plans that a lot of state and local government employees have. That the good news is they pay out a set amount. The bad news for some of these pension plans is in a world of ever lower rates, how do you make ends meet? Brian Chapata joins us. He's a debt markets columnist for Bloomberg Opinion. He joins us on the phone from Brooklyn. Hey, Brian, most of us have 401ks. Many of us do not have defined benefit retirement plans. Define for us what those plans are and what the problem is they're facing right now.
Yeah, absolutely. I mean, this was obviously huge in corporate America a couple decades ago, but it's since gone by the wayside. So it's mostly we're talking about state and local government pension plans. And basically what they say is for teachers, firefighters, police officers, you're in the public service space and you may not get a huge salary while you're working, but we are going to ensure that you have a steady retirement. We're going to pay you a set amount based on how much you earn in your later earning years. And so it's basically up to the fund managers to produce a return that allows them to meet those defined benefits that they're promising in the future. And it's really hard to do when you can't just buy bonds that ultimately pay the same amount that you're going to pay your retirees.
I was going to say, so let's pretend we haven't heard this one before. You can't make returns, so you have to go further and further out on the spectrum in terms of risk. If you're over at CalPERS, you're going to be like, no problem, I can totally make 7% return. Okay, maybe it'll be 5% a year, but it's going to be fine. Yeah, I've been hearing this for a long time. Why is this different?
I mean, the thing that's really interesting that caught my eye, because I've been asking a lot of, the big investment managers, are there any downsides to this low risk or this low yield environment for longer? And they say, well, actually look at the real rates. When you factor in inflation, it's actually negative. And up until this year, that's never happened in the 30-year space. The 30-year is seen as very much in the pension realm because they have a long-term liability that they want to match with a long-term asset. So when you get a negative real return on a 30-year bond, that's pretty bad because you can't actually protect yourself from potential downside risk in a process known as immunization. And so these pensions are going to be taking more risk, and as long as risk keeps performing, that's all well and good. But if it doesn't, then they're going to be facing some really hard problems.
So, Brian, on the one side of the equation, to release the pressure, you go out, you find other investments that generate a higher return than maybe a 60-40 portfolio. But on the other side, is there ever a movement to go back to retirees and saying, hey, we just can't afford it? There's just no returns in the market unless we go out and take this risk that's probably not appropriate for you?
Yeah, I mean, for better or worse, I mean, that's probably what's going to end up happening. I mean, I covered municipal bonds for a long time, and my home state of Illinois, for example, has a constitutional requirement not to do that to pensioners. So it's going to be a tough struggle it's a tough sell to go to retirees and say, actually, we can't promise you exactly what we paid when you signed up for this 40, 50 years ago.
Right. So what happens?
I mean, I think that the risk appetite just keeps going, and for better or worse, you're going to have people buying high yield bonds for that 40% of the portfolio. And I think as long as risk keeps performing, that's going to be just fine. But if there is ever a steep pullback and people don't buy the dips, I think people are going to learn really fast that high yield bonds are basically fixed income and equities put together, and it's not going to be necessarily a good thing.
I remember when, back in the day, I covered the media companies, and of course, none of them have defined pension benefit plans for the most part. CBS merged or acquired Westinghouse, and all Westinghouse was a defined benefit pension nightmare. So all of us media analysts had to break out our accounting books and go to defined pension accounting issues. What percentage of people out there or companies actually still have these kinds of plans, Brian?
That's a good question.
I mean, they still do, but most of them are no longer accepting new entrants. They're kind of legacy programs at this point, and they're pretty well funded. I mean, at least compared to the state and local area, like 85% funded, something like that. So they're in pretty good shape, and companies are able to allocate more when markets are going up. They're able to. Yeah, when times are good, they're able to allocate more, but it's really a tough sell for the local governments.
Yeah, interesting. Yeah, it's going to be a bigger issue going forward. Brian Chapata, thanks so much. We appreciate that. We'll keep in touch with you on this issue that, again, looks like it will continue to be an issue going forward, particularly in this post-COVID environment where revenues are, in fact, pressured. Brian Chapata, debt markets columnist for Bloomberg Opinion, joining us on the phone from Brooklyn. We appreciate that. Right now, let's get a check on the latest world and national news with Nancy Lyons in the Bloomberg 99.1 studio in Washington.
Thanks, Paul. President-elect Joe Biden says he is working to confront the different global challenges the U.S. faces. He says the U.S. needs to restore its alliances to confront things like China and the pandemic.
Right now, there's an enormous vacuum. We're going to have to regain the trust and confidence of a world that has begun to find ways to work around us or work without us.
Biden says he is not receiving the information he needs to take over the reins in January. Investigators are working to learn the motive for the Christmas morning bombing in Nashville. The bomber has been identified as Anthony Warner, who died in the explosion. David Roush is the director of the Tennessee Bureau of Investigation and spoke on NBC's Today Show.
Investigators from federal, state, and local authorities here in Nashville are working diligently, combing through the leads and the information we have coming in, and we've got information coming in literally as we speak that we'll comb through. We'll talk to a lot of people. There's a lot of interviews taking place right now.
Well, holiday sales are up slightly this year. MasterCard Spending Pulse says retail sales rose 2.4% from November 1st to Christmas Eve. Steve Sadoff, MasterCard senior advisor, tells Bloomberg much of the spending was on things related to the home.
People aren't spending on commuting. They're not eating in restaurants. That's leading you towards the dollars going towards items like the home and home improvement.
The big losers continue to be apparel stores, with many still uneasy about shopping in malls. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
Some pretty big executive news out of Goldman Sachs. Sheila Patel, chairman of Goldman Sachs Asset Management Union, is leaving the $1.8 trillion division after almost 2 decades at the firm. Patel is among the company's most senior women and shepherded some of Goldman's highest profile relationships with investors around the world. And, you know, Alex, it's a tough thing. There's been a lot of change in asset management business. There's a lot of pressure in asset management. But I think the key issue here is you see there's such a push for greater diversity within the ranks of Wall Street, particularly at the senior levels, in women and minorities and others, that when you see such a senior person as Sheila Patel leave, it's a little bit of a tough issue for Goldman.
Well, they've been thinning out their partner ranks anyway, right?
Yeah.
This is probably not one partner they wanted to lose, but with Sheila Patel, I just wonder, she's such a powerhouse. She's so great and very supportive of women who are under her, at least from my perspective and from my interactions with her, that I wonder what she's going to do. I mean, she's not an investment advisor, right? So she can't go run money. So she'd have to kind of get that if she went on her own, or does she sit on a lot of boards of asset managers? I don't know.
She's still young at 51, but it just I'm sure she has lots of opportunities. But it's interesting here because we know that the asset management business is a challenging business, but Goldman Sachs is so good at it. They were, when I was on the sell side, they were, an absolute top tier client. And really smart people across the board. And they do have $1.8 trillion in assets under management. But in that business, when you talk to Allison Williams of the world at Bloomberg Intelligence, it's almost like you can't get too big in asset management. Given the pressure on fees, it's all about size.
Right, it's a good point. So then you wonder, why would she go to a smaller place anyway or start a smaller arm at that place? Because it is all about scale and size. So I don't know what she's going to do, but I'm very anxious to know.
Yeah, and Goldman, it's a fine line between, as they kind of develop their business post-pandemic and post-financial crisis, they've really been looking at their businesses differently, but their fixed income and trading businesses have really come through really this last year driving the business. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We begin with a developing story. Qualtrics expects its IPO to price at between $20 and $24 a share. It has applied to list its shares on the Nasdaq Global Select Market under the ticker symbol XM. 13 minutes to go ahead of the closing bell. We are looking at an update here, possibly records today, on track for records right now. The Dow, the S&P, and Nasdaq all advancing after President Trump signs off on the stimulus measure. We've got the S&P 500 index up right now by 33 points off session highs, still on track for a record close, up 0.9%. The Dow's up 226 points, up just about 0.8%. Nasdaq up 103. That is a gain of 0.8%. 10-year down 132nd, 10-year yield 0.92%. Gold is down $9 the ounce now, down 0.5% at $18.74. And West Texas Intermediate crude down 1.1%, $47.70 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I don't want to drive.
Just drive, baby.
It's the question that drives us.
This is the drive to the close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
Well, when you have markets at or near all-time highs, as we do right now, you think about where we were back in March, it's just an extraordinary turnaround. But when you do get markets there, what you also get is a lot of companies tapping the initial public market offering market, either by a direct IPO, where now we've got SPACs and direct listings, to get a sense of kind of how 2020 played out and maybe how 2021 is going to look at this point. Christian Manafo, Chief Investment Officer of Liberty Street Advisors, also portfolio manager of SharePost 100 Fund. He joins us on the phone from New York City. Christian, thanks so much for joining us here. Give us just a look back on 2020. It seemed like we had some really, really big deals.
Yes, good afternoon. It's nice to be with you. Yeah, it was certainly an active year in any stretch of the imagination. IPOs, the traditional IPO structure at least, we've raised somewhere in the neighborhood of about $80 billion, which is almost 2x up from last year. SPACs were over $80 billion, all coming off of $13 billion last year. Direct listings, as we know, have been becoming more popular. So, yeah, it's certainly been an interesting time for, private late-stage innovation companies, and it's worth just understanding that, the structure that these companies are coming from is essentially structurally illiquid, right? The private markets are in a structurally illiquid asset class. And over the last couple of decades, what we've seen is that these private companies continue staying private for longer. And so as a result of that, you have these companies that are growing into, much larger operating businesses. Mm-hmm. And at the time that they go public or are attracting, also potential acquisition-oriented sponsor capital, they're just much larger businesses than what we saw in the past when we think of companies like Microsoft and Oracle and those types of companies when they went public. These companies are staying private for much longer. They're scaling into much larger businesses, and we're seeing a lot of demand for this high-growth innovation.
So I'm going to try and tie this conversation into something that we saw in the markets overnight, and that was the big sell-off we've seen over the last 2 days over in Asia, JD.com, Alibaba, etc. All of that really because China's cracking down on Ant, which was supposed to go public, would have been the biggest IPO ever, and then now they're cracking down. And, we're seeing something somewhat similar in the U.S. Obviously, these are very different circumstances, but the idea that these companies are too big, they're doing too many things. What are you noticing in the private market with mid-sized companies? Are they getting that warning? Are they wanting to stay smaller?
Yeah, no, I think it's a very good question. I think we've been fortunate that we haven't seen this play out at scale as of yet. I mean, we saw it clearly, a debacle last year with WeWork. and there's obviously some other ones out there. You look, let's face it.
WeWork feels like a million years ago, by the way, doesn't it?
Yeah. It does.
Wait, what?
Yeah, it does. yeah, it sure does, except for those who invested into it, I'm
That's
sure.
true. Good point.
Yeah, but I think the reality is, from a mainstream standpoint, a lot of the venture capitalists and growth equity investors who back these companies are very much focused on not just, executing on the operational plans of the core company, but also making sure that they're not overexposing themselves, because they've seen what happens. There's been so much capital that's flown into these markets over the last decade alone. Somewhere in the order of $6 trillion has come into the private markets, of which over $1 trillion has been allocated just for venture. And so when you can raise that kind of money, it's not difficult to get excited about trying to grow into different areas. But I think what a lot of it comes down to is governance and discipline at the board level to make sure that the company is staying focused on its core competencies and not stretching itself.
So, Christian, what's your outlook for 2021? I guess just the broad market outlook is, okay, vaccines are coming. The worst, once we get past the next couple of months, will be behind us, and we can look forward to maybe in the second half of the year, maybe even beginning in the second quarter, the economy beginning to grow again. What do you think about the capital raising and the IPO and the going public market in 2021?
Sure. So, look, I think in any market cycle, from our experience and from our perspective, we believe that there's always going to be strong public market interest and demand for innovative, differentiated companies that are generating substantial growth and market penetration, and that also can turn a profit, right? Because we saw that with some of the companies we're mentioning. Even though they have these hyper-growth type trajectories, they're unable to demonstrate profitability, or at least a path to that. So it's our view that in any market cycle, there's going to continue to be strong demand for these types of companies, that can show the ability to generate that profit. And again, there's just been a substantial supply buildup of many of these late-stage companies. And so, when we look at 2021, we look at our own portfolio, we see activity that's happening. We believe that 2021 should continue to be a very active year for the late-stage private company space. What we saw this year clearly was an acceleration of technology adoption across the board. These are not only technologies that are going to be disruptive, but they're also going to be complementary. And so, we think there's a lot of capital out there that's chasing growth, that's chasing innovation. We think that it's going to continue for the foreseeable future.
Is it all going to be in tech startups?
Well, it depends on what your definition of startup is, right? And so, when you have companies that are generating, hundreds of millions to billions in revenue, those are not startups from the traditional sense, and that's what many of these companies are. But look, not all these companies are going to be success stories, and not all of these companies are also going to achieve a public market currency. We have to remember that there's hundreds of billions in cash sitting on the balance sheets of the mega tech companies alone that are looking for ways to augment their own reach and capabilities. And so a lot of these companies will also get acquired. But yes, to your point, there are certainly not going to be all success stories.
Hey, Christian, thanks so much for joining it. We appreciate it so much. Very interesting talking tech investing and just growth investing in general. Christian Manalfo, he is the Chief Investment Officer for Liberty Street Advisors, also portfolio manager of Shares Post 100 Fund, joining us on the phone from New York City. And it's just staggering, Alex, the sums of money that people like Christian talk about that's on the sidelines, in private equity, in venture capital, just waiting to be deployed.
I know, but you have to wonder, no matter who wins the White House, how that cracks down, and I go back to this Ant Financial thing. I mean, you have Silver Lake in there, Warburg Pincus, these were real private equity, real money people in there who just didn't get to cash out.
I know. That was huge. We'll have to see how that plays out. But a big setback for Jack Ma. Alex, thanks so much for joining us for these past couple hours. We appreciate it. We'll chat tomorrow. I will be here for another 2 hours as we drive this story home. about 0.5% right now.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. There you have it. Sound of the closing bell at the New York Stock Exchange as we wrap up trading on this Monday, December 28th, a record day for the Dow, the S&P, and Nasdaq. Folks from Vanguard, by the way, virtually ringing that closing bell. Stocks rallied to records after President Trump backed away from earlier threats and did sign a coronavirus aid package over the weekend. S&P, Dow, Nasdaq, all at records following the surprise approval of the combined $2.3 trillion COVID-19 relief and government funding package. S&P up today by 32 points, a gain of about 0.9%. The Dow now at 30,403, up 204 points, up just about 0.7%. Nasdaq up 94, a record there, up 0.7%. Worth mentioning the year-to-date numbers so far this year, and with only a couple of trading days left, S&P is up 15.62% for 2020. By comparison, the Dow's up 6.5%. Nasdaq so far this year up by 43.76%. 10-year yield 0.92%. Gold down 0.5% at $18.73 the ounce. West Texas Intermediate crude down 1.1%, $47.76 a barrel. So, with an update on Wall Street, what about the market backdrop as 2020 winds down? Chad Morganlander is Senior Portfolio Manager at Washington Crossing Advisors.
We're believers that the second half of 2021 into 2022 will show some vibrancy, not only here in the United States, but also across the globe, and that those trends, economic trends, could be much better than consensus estimates.
Apple shares ended the session close to a record. The stock has risen about 85% so far this year. It is poised to close out its second straight year with a gain above 80%. Today we saw Apple shares just shy of a record, up 3.6% at 136.69. Stocks higher, we're setting records. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Wild thing, think you move me. I got a few moves I know you'll like.
Shaking all over.
Bloomberg Business Week. Movers and shakers.
Shaking, not stirring.
On Bloomberg Radio.
Interesting tape today as we close out the Monday trading. We had S&P, Dow, Nasdaq all up about 0.7%. The Russell down almost 4%. So rotation out of the small cap names that had been doing so well. Let's get a sense of what's going on out there in the markets as we close this Monday trading. We do that with Bloomberg cross-asset reporter Sarah Ponczek. Sarah, interesting that dynamic with the Russell.
So I'm not sure what I'm looking at compared to you. I see the Russell down 0.2%. So we did see a decline in the Russell. Nothing major, though. But it's interesting. We have seen this waning of the rotation that we've been talking about almost for the last 3 months, pretty much this entire quarter, really brought on by that positive vaccine news. Now, Jonathan Golub over at Credit Suisse, he actually sent out a note today saying that the rotation is over. And if you, in fact, look at the S&P 500 sector breakdown over the last month, I hate to break it to everyone, but guess what the best performing sector
right.
is? It's information technology. Granted, you have financials behind that, but tech up 6.6% over the last month or so. Financials up 2.6%. So you still see this pretty large gap differential there in favor of tech, your classic growth sector, you could say. So it's interesting that we have seen this waning of that rotation. At the same time, Jonathan Golub over at Credit Suisse points out that if you actually look at this, it was an unbelievable rotation by any means that we had seen into cyclicals, that we had seen into value. What he points out is that for the most part, what we have seen when we have seen this rotation take place was really on 4 different trading days. 3 of them including positive vaccine news, 1 of them including when Janet Yellen was nominated to be Treasury Secretary under Biden. So what he's pointing out is the fact that if you look over the quarter, if you look over the time span of a couple of months, you do see pretty strong cyclical outperformance, value outperformance, but that's really been news-driven on certain days. And you look at today, Charlie Pellet just pointed out the fact that Apple did not close at an intraday closing high, but it did close at a closing record high, and that's the first one since early September. So it makes you think it's saying really about to break out here again when you see them leading in the markets like we saw today.
Yeah, I think Jonathan Gold at Credit Suisse raises an interesting point here, because my question to strategists and fund managers is, okay, I get the rotation trade out of the Amazons and the Apples and all the other big tech names that have driven this market arguably since the financial crisis into, again, some of those cyclical areas, maybe even the small caps. But my question was, how long does it last? Like, what kind of legs does this trade have? Because it feels like just in the back, whenever we have a day that is not a news-driven day, the same old tech names are still there. So it just felt like on the margin, fund managers were just trimming a little bit of the growth and shifting it into cyclicals, but still the growth story is still very much on.
Right. That's exactly the point. We still have extremely low interest rates. If you look at real interest rates, still deeply negative, past negative 1%. That is a dynamic that does help your growth sectors of the market. At the same time, you have to question. Right now, in the last couple of months, we have seen financial stocks rally. We have seen energy stocks rally. We have really seen them catch up. You could call it a catch-up trade. We have not seen tech, even big tech, mega cap tech, like these FANG stocks, really come under immense pressure, as seen with Apple closing at a record high today. So it makes you wonder, these are companies that are still very strong companies. They're well understood. They have very strong cash flows. Just because you might see a catch-up trade from cyclical areas of the market, that doesn't necessarily mean that you're going to see large, well-known growth stocks like the FANG companies, for example, Apple, Amazon, Microsoft, Netflix, Facebook, you name it, come under serious pressure.
Yeah, I think that's a good point. I think one of the issues, I guess, for the stock market, Sarah, is it's performed so well. As Charlie was saying, the S&P is up over 15% and Nasdaq up over 40% year to date. Is the Fed has done what it can do. Fiscal stimulus is what it is. Maybe we'll get some more under Biden, but at some point, the companies have to deliver the earnings, and I think the pressure on the companies to deliver on those earnings and out-deliver, quite frankly, when you listen to Gina Martin-Adams, the Bloomberg Intelligence strategist, need outperformance. That's really where the next big challenge could be for this market.
Oh, absolutely. And if we look what companies have been doing in relation to fourth quarter earnings season, we have actually seen more than half of companies that have issued profit guidance for the fourth quarter raise it. Now, granted, the fourth quarter was a relatively positive time. We started to see COVID cases rising well into towards the latter end. Now we do have a stimulus bill on the table that President Trump has signed. So we see companies starting to get incrementally more positive. At the same time, if you look at the analyst side, we have now seen analysts raise their 2021 earnings estimates for the S&P 500 or S&P 500 companies for 10 straight weeks. So we do see optimism on the earnings front, and that is why many investors are pointing out the positive Goldilocks scenario possibly of 2021, where you do see this very strong earnings comeback of double-digit % gains. At the same time, you have a Federal Reserve that is still very much on the sidelines. They're not going to budge, but you're going to start seeing an economic recovery at the same time. So you're going to see real economic growth, and that, in turn, is also going to be accompanied by very, very easy monetary policy.
Yeah, I mean, that's certainly the bear case, Sarah, and it's hard sometimes when you look at some of these, where we are with the pandemic right now, and you look and say, boy, it's December, we got a tough January, tough February, and then maybe into March we start to get some relief, but that is the bull case, isn't it?
Right, and that's been the story all year long. You could ask anyone back in March when we were bottoming out on the stock market, if you had told them what we were about to live through, what the world was going to look like, minus maybe Federal Reserve and fiscal stimulus actions, where would the stock market be today? I mean, I highly doubt many people would have gotten that question right. Yeah. It's been an unbelievable year, and really much of it does come back to stimulus measures, both on the monetary and fiscal front, and the reality is much of that is not going to change.
Yeah, just an extraordinary year, to say the least, in so many different ways, but certainly for the markets. Sarah Ponchak, thank you so much for that. We appreciate it. Sarah's a cross-asset reporter for Bloomberg News, joining us on the phone from New York to get the latest on the markets. Right now, to get the latest on world and national news, we go to Ed Baxter in our Bloomberg 960 newsroom in San Francisco. Ed.
Hey, Paul, thank you. House is set to vote to fulfill Donald Trump's demand for $2,000 relief checks. The vote scheduled in about an hour now. It needs a two-thirds vote to do it. It remains unclear how Republicans will react. They and Senate Republicans have basically been thrown under the bus by Trump, so we'll have to wait and see how it plays out. The vote is scheduled for the next hour. Now, this is playing out how in Georgia, the Senate races. Emory University professor in Atlanta, Alan Abramovitz, says it's not helped the Republican candidates, especially David Perdue, who is running advertising, pumping the bill.
But at the same time that he was making that argument in his advertising, of course, President Trump was undermining that argument by attacking the bill and particularly attacking the $600 direct payments as inadequate. So.
And Bloomberg is now running a story today that says David Perdue called Mr. Trump on Christmas Day to plead with him to sign the bill, saying it was hurting his chances to win. Very severe warning today from California Governor Gavin Newsom, who says the travel over the holidays will bring a surge on top of a surge on top of a surge. He says the Los Angeles hospital system is under extreme pressure, with ambulances now being turned away.
96% of LA County hospitals were on diversion. That's, in essence, when you can't accept ambulance diversions, you can't accept the ambulance for acute patient needs, they're diverted to another part of the system.
And he says it looks like the stay-home order will stay in place. And in New York, Governor Andrew Cuomo, warning people not to try and cheat and bump into line for vaccine, says you'll be prosecuted. In San Francisco, I'm Ed Baxter.
Ed, thanks so much. Charlie Pellet, I want to chat with you about Cathie Wood and ARK Investment Management. The fight for control of ARK Investment Management is over after Chief Executive Officer Cathie Wood purchased the option that threatened her control. I mean, Cathie Wood has had such an amazing run. The fund is just, under ARK, they have $43.6 billion under assets under management. And I think she's really become the first kind of ETF star in the marketplace, Charlie.
Indeed, and among our most read stories on the Bloomberg Professional Service. Absolutely fascinating story. Lots of twists and lots of turns to all of this. But last month, Resolute moved to exercise its option, acquired back in July of 2016 to buy a controlling voting and equity interest in ARK. Resolute's actions, according to our Bloomberg News story, came only 3 days after ARK said it would explore the potential replacement of Resolute Investment Distributors, an affiliate of Resolute Investment Managers, to distribute its products. Wood, at the time, said she was disappointed in Resolute's move, and the story goes on from there, Paul.
Yeah, it's just amazing. And you think about her ETF work, that's where she's really getting a lot of attention right now. Listen to this in the article, Charlie. Her ARK Innovation ETF, and the symbol's ARKK, just experienced another record week of inflows, boosting total cash added this year to $9.5 billion. The fund is up more than, get this, 170% year to date. And she's got some big bets on Amazon and Bitcoin and some others, and she's just been very aggressive with this innovation ETF.
Indeed, and sort of very interesting, perhaps a hint of what was to come with the twists and turns in this story. Earlier this month, she did tell Bloomberg News that the dispute was headed toward an amicable agreement that would leave her in control. She said that she is delighted to reaffirm the partnership with Resolute for its U.S. distribution.
Yeah, we'll certainly follow up on this story and Cathie, and she's been very good to Bloomberg TV and Bloomberg Radio in terms of sharing her thoughts and insights. So it looks like smoother sailing for ARK Investment Management and Cathie Wood going forward. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Light trading volume, but a day of records after President Trump backed away from earlier threats and signed a coronavirus aid package. The Dow, the S&P, and Nasdaq all rallying today, with the S&P up 32 points, up 0.9%. The Dow Jones Industrial Average up 204, up 0.7%, closing above 30,400. We've got Nasdaq up 94, higher by 0.7%. 10-year down 1/32, 10-year yield 0.92%. Gold down 0.5%, falling 10.20 the ounce to 18.73. And West Texas Intermediate crude down 1.1%, 47.69 a barrel. Recapping records on Wall Street, with the S&P up 32, a gain there of 0.8%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Charlie Pellet, thank you so much. We appreciate it. Taking a look at Alibaba here, the stock is down about 30% just in the last 2 months, and that's on rising concerns that the Chinese government's taken a really tough regulatory look at not just Alibaba, but Alibaba certainly, but some of the other tech giants coming out of China, and that's really impacted the equity values for Alibaba and others. Andy Brown, editorial director for Bloomberg New Economy, knows a thing or two about doing business in China. He joins us on the phone from New Hampshire. So, Andy, can you kind of lay out for us what's going on, what's between the Chinese government and Alibaba and its founder, Jack Ma?
Yeah, so at its simplest, this was a regulatory assault on and financial, just ahead of its listing. And this was triggered by a speech that Jack Ma made insulting the Chinese financial regulators. And, you know, this seemed to have surfaced some pretty deep anxieties among regulators about this giant that was about, this fintech giant that was about to be unleashed, worth, had it gone to a listing, which it didn't, it would have been worth something like $300 billion. And there were regulators who thought to themselves, you know, we've created this Frankenstein's monster here, potentially out of control, and we've got to chain it up inside a box. And that is precisely what they've done. They've instructed Ant Financial that they've got to go back. It's got to go back to its original mandate, which is a payments platform. Essentially, they've neutered. They will neuter other parts of its business. And then, as you say, you know, this sort of regulatory mugging, if that's what it was, is now extended to Alibaba itself. And the question now is how far this is going to go. I mean, is this going to be a generalized regulatory reining in assertion of party control over the entire internet sector? Or could it even go further? I mean, is this a broader attack on the entire private sector of China by the state? We just don't know at this point.
Well, what's interesting, Andy, as an internet analyst, I followed Alibaba and Jack Ma, since the early days of the company. And one of the things I've always was amazed at how well he interacted and managed the relationship between his company and the Chinese government. Arguably, that was one of his greatest value addeds to the company, was the ability to really don't get the government on his side, but just kind of take a light touch. Did he just miss this one, or does he have a bigger strategy? Because it looks like a big miss here in terms of miscalculating his relationship with the government.
Yeah, he was famously quoted as saying, "Love the party, but don't marry it." You know, I
right?
Mean, he always kept this its distance, and it has to be said that the party has always regarded private enterprise with a degree of suspicion because it doesn't control it. But you also have to remember that Alibaba is not as popular as it once was. I mean, not everybody sees it now as the champion of the little guy, the small business entrepreneur. He's come to be seen by certain sectors of society as the sort of, as a sort of a predatory figure, abusing his monopolistic position within e-commerce, and about to do the same in fintech. So, you know, Xi Jinping, if indeed it is Xi Jinping who's directing this, is actually got quite a bit of public support in this case.
So, you know, Andy, in the past discussions with you, as we talked about, you know, trade tensions between the U.S. and China, we've always kind of talked about it in the context of President Xi and kind of where he is in his arc of power in China. Is this, I mean, this for him to dial back, as perhaps he is doing, kind of just the growth of free commerce, if you will, or capitalism to whatever degree it exists in China, most notably some of these big tech companies. Does he have the strength to do that, to actually push back on the economic freedoms such as they are that China's been able to develop over the last, call it, 10, 15 years?
Yeah, so practically speaking, yes. He has all the tools that he needs to clamp down absolutely if he wants to. And indeed, regulators right now, as we speak, are in Hangzhou, rifling through the drawers of Alibaba to uncover evidence of abusive, monopolistic behavior. And Jack Ma has no alternative but to basically hand over the keys and say, yes, sir, to the officials coming to inspect. You know, on the other hand, Xi Jinping absolutely needs the innovation, the drive, the dynamism of the private sector to build an economy which increasingly is supposed to be led by consumption rather than investment and exports. And yet, as I say, the party doesn't control. And there's this conflicting impulse to assert absolute control. And, you know, the desire to assert absolute control, but the need to allow private enterprise to have relative freedom within the system. In the end, it just seems that he can't let go. This is political. This is ideological.
Fascinating to watch this development here, which, quite frankly, as you can tell by the stock, most investors were not expecting this turn of events. Andy Brown, editorial director for the Bloomberg New Economy, our go-to person on all things China. He's had so much experience there. He joins us on the phone from New Hampshire. We appreciate that. Again, Alibaba, the stock's up about 0.2% today, up 5% year to date. But the key issue, it is down 30% approximately from its late October highs here, as the Chinese government really taking a very harsh look at Alibaba, starting with its Ant Financial, which is its fintech company that was looking to take public this year in 2020, one would have been the largest deal ever. For those of you listening in New York and San Francisco and watching on YouTube, Bloomberg Business Week continues. If you're listening on 199.1 in D.C., Sound On is next.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Coming up, we're going to chat with Sarah Greenstein. She's the CEO of Lidl. It's a company that's going to talk about pivoting to do more on the PPE front to become a bigger player in that supply chain. But first, let's go to Charlie Pellet, get an update on all things on the news front. Charlie.
Hi, thank you very much. And indeed, we do have a headline to pass along from the Bloomberg Professional Service. TAL Education is going to raise $3.3 billion from investors, including Silver Lake. And the House is set to vote today to replace the $600 stimulus payments in the newly enacted pandemic relief bill. That should be coming up shortly. Today we saw the vote coming up scheduled for this afternoon. The bill will need 2/3 support to clear the House under the procedure that will be used for the vote. It remains unclear if enough Republicans will shelve their opposition to higher payments. Today it was a record-setting day on Wall Street with the Dow, the S&P, and Nasdaq all advancing today. The S&P 500 index did advance today by just about 32 points, up 0.9%. The Dow up 204 points, up 0.7%. Nasdaq up 94 for Nasdaq, a gain of 0.7%. 10-year yield 0.92%. Gold down 0.5%, 18.73 the ounce, and West Texas Intermediate crude down 1.1%, 47.70 a barrel on WTI. So it was an update on Wall Street today. A huge study of another COVID-19 vaccine candidate is getting underway as states across the country continue to roll out scarce supplies of the nation's first shot options. This latest one made by Novavax, and on Bloomberg Television and Radio this morning, the CEO Stan Erck was asked if it will work on the newer variations of COVID.
We don't yet. Everybody's in the middle of testing other vaccines against that strain. What we do know is that our platform, we've used the same platform, a recombinant particle, with an adjuvant that's worked very well against flu, which has many strains. And we've shown that our flu vaccine recently showed a very broad response against multiple strains. And so we're hoping that we have the same effect with COVID.
The Novavax candidate is the fifth to reach final stage testing in the United States. Today we did see Novavax shares actually moving lower today, down by 9.7%. Tough day for a lot of the vaccine names. Pfizer, for example, down 1.2%. BioNTech lower by 9.1%, and Moderna was down by 9.7%. Again, 10-year yield 0.92%. Gold down 0.5%, 18.73 the ounce. West Texas Intermediate crude down 1.1%. 47.72 a barrel. Recapping, stocks at a record. S&P up 32, up 0.9%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Charlie Pellet, thank you so much. We appreciate it. Well, since the beginning of this pandemic, we've seen many companies, businesses have been dramatically disrupted, but we've also seen companies that have been able to pivot their strategy, pivot their operations to try to adapt to a changing marketplace and try to take advantage and maybe add some value in this new world we live in. I think one of those companies are the next folks we're going to speak to. Sarah Greenstein, President and Chief Executive Officer of company Lidl. She joins us on the phone from Florida. Sarah, thanks so much for joining us here. I'd love for you to just start out and tell us, what does Lidl do, and then how did you guys adapt your business to this new pandemic world that we live in?
Sure, thanks. Good afternoon, Paul, and happy almost New Year, right?
Yes.
I think everybody will be happy to see the new year in. So Lidl is a 150-year-old company that is based in Connecticut. We've got about 3,300 employees around the globe, and we make highly specialized products with very deep materials science expertise that go into what I would call very highly engineered parts and components. A big part of our business is, and always has been, specialty filtration. So you might not think of COVID-19 and specialty filtration until you think about the N95 masks, the surgical masks, the filtration needed in clean spaces, and that's where Lidl comes in. We make that critical component that critical filtration media that goes into all of those applications.
Well, Sarah, we saw obviously the demand for those masks is just through the roof. I wonder how you guys at Lidl maybe adapted to that. Was it simply just manufacturing more, adding new production lines? How did you guys adapt to this increase in demand?
Great question. So believe it or not, we did not make the filtration media that goes into the mask prior to COVID-19. We have global capacity, capability, engineering, talent all over the world, and we were deploying that towards filtration media primarily for indoor spaces. But we quickly recognized as the pandemic hit that the best armor that we had as people was high quality PPE in order to protect ourselves from COVID. So we acknowledged that, we knew that, we worked very quickly to redeploy all of our available capacity, including our engineering capability and our manufacturing capacity around the globe, to make the highly engineered filtration media that's required for N95 masks and respirators and surgical masks. It's what Lidl does, that specialty filtration capability. And so it was only sensible, frankly, for us to do that. But we acted significantly. We committed to investing an additional $40 million to support our growing specialty filtration business. And I heard you on the teaser say, that this is about PPE, but I will tell you it's about an even larger opportunity, which is to meet the needs of the massive structural shift underway towards better indoor air quality. And so while today the need is for high quality PPE, the ongoing and sustained demand for this higher performance filtration solutions, whether, it's in our homes, our offices, our schools, is critical. We spend 90% of our time indoors in the developed economies. And prior to COVID, we probably didn't think much about the quality of the air we breathe if we were so fortunate to be able to not do so. But now we know, right? You can't take it for granted. And so this trend towards better, healthier indoor air is here to stay. And that really is at the sweet spot of what Lidl has always done.
Hey, Sarah, you're going to stick with us here for another segment. We have to do a little bit of news, but there's a lot more we want to talk about that subject, because that is really a key issue for getting back to quote-unquote normal, reopening businesses, reopening our economy. And we'll have more on that coming up. Sarah Greenstein, President and Chief Executive Officer of Lidl, on the phone from Florida. She's going to come back, and we're going to explore some of those issues again, because you think about where we are here. Once we get the vaccines, it's going to be about getting people back into the businesses, back into restaurants, and all of that. And filtration is going to be a big, big part to get the confidence level back for people. Right now, let's head down to our 960 studio in San Francisco. Head out to San Francisco for world and national news. We do that with Ed Baxter. Ed.
All right, Paul. Thank you. President-elect Joe Biden says the Department of Defense is obstructing his team from getting critical information and says it can very much hurt the United States.
Right now, there's an enormous vacuum. We're going to have to regain the trust and confidence of a world that has begun to find ways to work around us or work without us.
And he says Mr. Trump also gutted a good number of agencies, and his team needs information to build those teams. Meanwhile, the House right now debating the Trump demand of raising checks, the stimulus checks, to $2,000. This being backed by Democrats with Republican resistance. In the Senate, it's not likely to pass, but Mr. Trump has put real pressure on Republicans after shooting down their victory. Also up for vote today is a House override vote on the Pentagon funding bill that was overwhelmingly passed on bipartisan vote in both houses, then vetoed by Mr. Trump. New York, Governor Andrew Cuomo is warning people not to try and cheat and bump into line for a vaccine.
We want to send a clear signal to the providers that if you violate the law on these vaccinations, we will find out and you will be prosecuted.
And he says the economy can't be shut forever and needs practice health safety. Everybody does. And a New York order that limits the number of people allowed in houses of worship has been blocked by the Second Circuit Court. California Governor Gavin Newsom says the hospital system in Southern California is under extreme pressure.
33 to 96%. That's Saturday's specific numbers. We use that just to illustrate the pressure now we are experiencing in terms of the system, particularly the hospitals in Los Angeles County.
This is Bloomberg.
Hey, Charlie Pellet, fascinating story, getting a lot of readership on the terminal right now. New York State is using its Son of Sam law to claw back the profits from a crime, a step it hasn't taken since at least 2001. The law, which dates to 1977, prohibits convicts from making money from their crimes through lucrative book and movie deals. And the state legislators created the law after reports that serial killer David Berkowitz, who was dubbed the Son of Sam, was being offered money for a tell-all book about his crimes. And now it's being applied again.
Indeed, and this brings us up to 2020 involving a lawsuit against Anna Sorokin, who was making a movie with Netflix on the streaming platform. It's a TV series based on her life story called Inventing Anna. Now, according to state authorities, she was convicted of second-degree grand larceny, theft of services, first-degree attempted grand larceny in a state criminal court in Manhattan. And to make a long story very short, according to Dow Jones, which first published this story, she ripped off a lot of people, and they are now trying to claw back that money. The way they're trying to do it is through New York's Son of Sam law, which is not used that commonly to get profits back. As you say, it prohibits convicts from making money from their crimes through lucrative book and movie deals.
Yeah, and authorities, they've frozen already $140,000 that Ms. Sorokin received from Netflix in 2019, clearing the way for two of her victims, both banks, to pursue court action here. So, I mean, I think this is clearly, it just feels like it follows right along the David Berkowitz issue here. Ms. Sorokin, who previously went by the name of Anna Delvey, was sentenced to 4 to 12 years in prison and ordered to pay nearly $200,000 in restitution and a $24,000 fine. So it looks like she's trying to offset some of that risk.
And in addition, I just want to point out very quickly that in addition to the fines, in addition to what could be clawed back, she could also be deported back to Germany.
Right. So anyway, interesting story on the terminal, a little bit off the beaten path, but it caught our attention. We'll have more coming up. This is Bloomberg.
In April, but it wasn't enough.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Wall Street investors were cheering the coronavirus aid package. The Dow, the S&P, Nasdaq all surged to records today. S&P 500 index up 32 points, up 0.9% at 3735. The Dow up 204, up 0.7%. Nasdaq up 94, a gain of 0.7%. 10-year yield 0.92%. Gold down 0.6%, 18.73 the ounce. And West Texas Intermediate crude down 1.1%, 47.71 a barrel. So again, recapping, S&P up 32, up 0.9%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Charlie Pellet, thank you so much. We appreciate that. I want to rejoin Sarah Greenstein. She's a president and chief executive officer of Lidl. She joins us on the phone from Florida. Sarah, I want to follow up on the last point we were chatting about, which is on-premises air filtration. You guys have a lot of experience with that. Do you believe, or where are we in terms of coming up with some technology that can, filter out COVID-19 like viruses? Where are we in terms of that technology?
Sure. So we're in a good place. When you think about filtration in a place of, in an office, in a school, in a home, right? The filtration in our places of gathering are rated on what's called a MERV scale, Paul. And prior to COVID-19, most of us would have had MERV 8. MERV stands for minimum efficiency reporting value. But what's happened since COVID is that, in fact, in the United States, as one example, the CDC recommended all office buildings upgrade the filters to MERV 13 and above. And what that refers to is the size of the particle that they can capture. So the MERV filter really runs on a 1 to 16. The higher the number, the smaller to a micron level of particles that they can capture. So a MERV 13 rated filter, as an example, can trap particles that are 0.3 micron or larger, which includes bacteria and most viruses. So as we come out of COVID-19 and as we begin to try to get back to some semblance of normal life, you can imagine in any commercial building, in any restaurant, in any shared space, that the indoor air filtration will have to be boosted and improved to a MERV 13 or higher rating, thereby protecting all of us, right, in a different way against a different expectation than we might have had pre-virus.
So give us a sense of how this might play out. Is this something that, a large company, large office building, I can afford to make that upgrade economically? I have the resources, but perhaps small and mid-sized businesses are going to be more challenged to do that. What's the kind of economics of that, do you think?
Yeah, so it's a good question, and the honest answer, however frustrating might be, it depends, right? So the technology of filtration media, is diverse, and for those systems that are older, it might be more complicated you might have to change out your system versus just change out a filter. In newer buildings, Paul, with newer HVAC systems, it's very straightforward. You change out your filter, right, like you do at home. Okay. Right. And I would also say that there is a lot of product development innovation work going on right now with our filtration, with our customers. We make the filtration media. That's what Lidl does, right? The white pleated stuff you might see underneath. But we work with the largest global filter makers, and we are working hand in hand right now to make sure that we have technologies at all level of affordabilities that can, get to this MERV 13 or higher rating. So if it is an older system, there is an innovative solution to it. That work is well underway.
Are you seeing demand for this type of filter? Because I would think if I were a business, say a restaurant, I would want to advertise that I am MERV 13 compliant. Absolutely. And I think that would be a draw.
Yes, and I mean, as an example, Paul, I've got 3 children, and my kids' schools wouldn't reopen until they had changed out all their filters to a MERV 13 or higher filter, and that was one of the checklist, points on the checklist that had to be done. So absolutely, that is already happening, and the expectation is it will continue to, and that's just in the United States. Around the world, the same phenomena is underway, which is why we, believe this massive structural shift is underway, because we're seeing it happen right now.
Right. So in the meantime, we're dealing with this, second or third wave of cases, and then we're seeing the hospitalization rates jump dramatically and hospital usage. And so it just brings back those bad memories of March and April where on the PPE front, we had some shortages of certain equipment. Where are we in terms of PPE, given this recent surge that looks like it's going to continue for at least a couple more months?
Right. So first and foremost, right, the vaccine can't come soon enough and in mass form, right, which I know we're working towards. However, the reality is that demand for PPE is even larger now than it was in March. We're burning through it at a faster pace, and stockpiles across the globe have been completely depleted. So there is a significant surging demand for PPE, and that is expected to continue through at least 2022, because we not only need to get everybody vaccinated around the world, but we also then need to replenish all of those stockpiles that have been completely depleted. And the other piece of this is there's been a big wake-up call around supply chains. When all of this started, I mean, really, the world was caught flat-footed because almost all of the world's PPE was made in China. And there's been a significant shift. The U.S. government has partnered with us. The French government has partnered with us to put in place a sustainable, reliable, high-quality supply chain that will last to be able to have PPE, because they now recognize it's a matter of public health and national security. So there were lots of lessons learned, for everybody, I think, as we've gone through this. But that demand for PPE is here for a while we also work to innovate to make sure we can keep the indoor air spaces healthy as well, as we all try to get back to some sense of normalcy.
So where do you think, let's go to your company, Lidl. Where is your production primarily?
So we have production actually across the globe. The bulk of our specialty filtration production is here in the United States, as well as in France. And then we also produce technical nonwovens that goes into medical applications in Canada. And so, I mean, we certainly work our whole supply chain to make sure that we can supply around the world and partner with our customers where they are.
Sarah, so what do you think are the next key issues that we, in terms of dealing with these viruses, what's the next thing we really need to think about longer term?